The Federal Reserve has cut interest rates once again, this time dropping at 0.25%, making this the second drop in 4 years. ABC4's Annika Johns joins us live after speaking with local financial professionals about what this could mean for Utah and the country moving forward. Annika?
All right, so the Federal Reserve has now reduced interest rates by 0.75% in the last 2 months. But what exactly does that mean for the everyday person who is paying off loans or looking to buy a home? Now, like Jordan mentioned, I spoke to a handful of professionals who say this is just the beginning of what they believe is a turn for good, but the time to act is now rather than later.
Now there's this tightrope that they're trying to walk between not tanking the economy by leaving rates too high for too long, but also making sure inflation comes back under control.
After dropping interest rates by 0.5% just over a month ago, the Federal Reserve has decreased interest rates by another 0.25 percentage point. While people across the country hope to see the cost of borrowing to decrease, the process of getting them there is slow going.
As the Fed start to lower interest rates, you don't immediately see something happen with credit card rates or auto loan rates or mortgage rates, but you are going to see banks decrease money market rates, CD rates, obviously treasury yields.
But the trajectory of inflation could shift in the coming months due to this decrease. But what does that look like for Americans and specifically for Utahns?
We're in what's called a disinflationary period where we still have inflation, but it's lower than it was a year ago. Then that slowly lets us have this positive kind of path forward to where we can get prices back in order. We can get prices for things like food or gas back in order while still having a strong labor market, a strong job market, and also just a strong GDP and economy across the board.
And what about some of the rates people have with significant loans, like credit card payments and auto loans? Well, those are expected to decrease as well. One of the only things not directly affected by the federal interest rate is mortgage rates. But that doesn't necessarily mean this decrease won't impact them, especially as a new president moves into office.
There was a reaction that came out of that where mortgage rates really increased quite a bit on Tuesday after the election, or on Wednesday. And then when the Fed did their rate cut, we saw all of those increases come back down. What it does do is it starts to be a lead indicator where we may see those rates come down, and we did see it.
This is not a short-term fix, but a step on a long road that professionals say can and should be taken advantage of by consumers, especially when it comes to buying a home.
We like to think, well, I'm going to time it perfectly, and I'm going to wait for that rate to get that lowest point, then I'm going to go buy. The reality is builders right now are suppressing those payments by buying down the rates. Now is a perfect time to buy.
Now, the Federal Reserve will meet again in December to decide what direction to go with the rates. Jordan, I'll send things back over to you.